Hey team, we're here this week tackling the age-old question about whether or not it's better to invest in the stock market or to invest in real estate. And we have the definitive answer, and that definitive answer, after a lot of thought and calculation, is it really depends. It depends on a lot of things. Number one, when we always think about investing, we think about liquidity. How long can you lock this money up, and do you feel confident that nothing is going to come up? I think you should always think about investing specifically early in that journey as a long-term play. But we all know that life comes in the way, and sometimes you get access to that money. When it comes to liquidity, obviously stocks are always going to beat real estate. It's obviously just by the virtue of it a lot more liquid. It means you get your money out a lot easier. You can also sell a portion as opposed to the entire thing, whereas homes can kind of be binary. There are some other tools in that space, but none of them are really great. Diversification is another core tenet of investing. It's a lot easier to get a diversified basket of stocks than it is to get a diversified real estate portfolio. You can do this using certain tools like real estate investment trusts, getting into groups, but again, it's a little bit more complicated than that. But when most of us talk about investing in real estate, we're talking about buying our home. And usually when you do that, you decide to buy that house in that market because that's where you want to or need to live, work, and play. So it's a little bit harder to diversify in that same sense. But it's also really hard to live inside of a stock position. So owning your own home has the added benefit of reducing costs like rent. But there are certain costs that you will incur as you do that, like if you have your mortgage, which, we're going to have our mortgage. You're going to have your mortgage expense. You're also going to have your property tax expense, maintenance, upkeep, insurance, things like that. Owning a home is kind of filled with a lot of surprises. It can be very rewarding. It can also be very daunting. When it comes to performance, when you look at the numbers, is maybe not the most accurate way of looking at it. Since the 1970s, the stock market in aggregate, I think the S&P 500 has returned on average 10% year over year, whereas residential real estate has returned only 5.5%. But that's not necessarily like a one-for-one ratio. When you think about the way real estate investing works in this country, when you go to buy a home, you save up a down payment for a mortgage, let's say $20,000, and you get a mortgage for $250,000. From day one, you have a $250,000 asset appreciating at that 5.5% rate. So you're really kind of jumping ahead because you have this equity already, or you have this exposure to an appreciating asset class from day one. So real estate kind of beats stock investing on that same note. That's kind of what we've decided to innovate upon, is being able to provide that same sort of exposure to a broad-based stock position in the same way that a mortgage lets you, basically live in a house today and gain the upside of owning that home today. We're doing that for stock investing in a larger and more meaningful way. So we would love to hear what you guys have decided for your long-term investing strategy. If you chose a mix of real estate, stocks, or one or the other, we'd love to hear why and what your thoughts are on that.